Good morning. We're going to take a look at currencies and, well, the euro and the currency pairs. Oh, they've been a bit of a little nightmare, haven't they? Where do I expect them to go? Okay, we saw this dead cat bounce. We couldn't do anything about that Friday. It started to come down, but we didn't have a bad close, I've got to say. But I still believe the euro is going lower. I know I've been saying this for quite some time now, but I do. I think the dollar's beginning to turn and that the euro will come down and test this little area here. Now the first go would be here, and that's 1886. You can see all these tops along here, and obviously it's also the 61.8 fib retracement. Now if we break, and I think we will, then 118.27 to 118.33 to 118.27 will be the area that the market goes to. Now the 200-day moving average has always been important to Eurodollar and most markets. You know, they gravitate towards any significant area that they can, and this 18.27 and 33 is one of those areas. And to be fair, the first one isn't that far away. The second one, yeah, but there's no reason to suppose that this won't go lower. I've seen nothing in this particular chart that would lead me to thinking it wouldn't, to lead me to thinking it would go screaming higher. If you can see our stochastics, they're beginning to converge at quite neutral levels, and the RSI is pointing lower. So for that reason, I do believe that we're in for a bit of a ride because when markets turn, you know, it takes a while for the fundamentals to kick in. It always has. So let's look at the Dixie. Now, we've been up towards here. We're holding on to some good support, and that's coming in at 91.58. So we're 91.76 at the minute. You've got to be patient with these markets at the moment. There is no reason to rush out and basically do anything with them. You just need to relax, have the position that you think is the right way round, and wait for it. We're always strategic traders. We're never in and out scalpy people. So, you know, as I always say with trading, patience is a virtue. And nothing could be prevalent than waiting for the euro. Needs a lot of patience, but with the right way round, I think I've got the stops in at break even. So, and we took some profit Friday, so there's no reason to get all excited about our positions. Stops are in, and we just run it. Now we'll have a look at the euro sterling. I've talked to you about this last week. Here is our first target. We're looking at 85.38 there. Now, if we do tick down to there, you've got to see that these stochastics are really oversold at the moment. So you've got to be careful. But a double bottom is a double bottom. But as I said to you last week, look, you know, euro sterling isn't renowned for its buoyancy, and when it does, it quickly fades out. So watch this. It's a no-brainer trade to buy down around these levels, but you need to keep your stops about 30 pips below that 85.37 area, because if it does go, it's going to take out the stops, and you do not want to get stuffed with that losing position. Alright, so remember, buy it but tight stops. So we'll take a look at Euro Swiss. So we've been looking at Euro Swiss, same sort of thing as what I've said. You know, I think Euro Swiss is going to be on the way down now. I can see that coming down. If it breaks the 9-day average, which is at 110.85, we're at 110.92 now. So it's not a big deal. So if you break 110.69, I think this is easily where it could come back to, which is 101.5. So you're talking about 140 points, not to be dissed. If we go up to here, which is 111.51, right, sell it, because it doesn't matter where, I can't even show where it's come from, it's just too annoying. Because every time I go back to 120, I just think of the SMB, so I don't want to go back there. But if it does break that 111.53, 51, you know you've got a good move to the top side. You know, it's a no-brainer. So remember that the stochastics are turning bearish from quite neutral levels after making a double top. Well, the market didn't make a double top. So when it doesn't, and you see this in the stochastics, we have to take notice of it. That's what we do. We're always looking for opportunities. That's what technical trading's all about. So remember this of the levels that I'm telling you. You can draw, if you want, a little trend line there. Do that. Could this be a pennant? Well, it could be. But still look at the technical indicators, because they're going to show you the way. Okay, but that's all I can say on the Euro Swiss. So now let's have a look at Euro CAD. As I said last week, we're not looking healthy on Euro CAD. We're not. And there's nothing of any substance I can see unless for it going down to here. I mean, we can put on a fib level, but it's a bit of a weird one, because you'd be taking that low to that high. So we've got 147.81, we're trading at 148.53. Do we look like we're going to go higher? No, we don't. Look at that big double top there. Perfect. So that was the end of EuroCAD. So the euro is under pressure, you know, for sure. Maybe it's not under pressure against the Swiss, but that's only going to be a matter of time before it is. So now let's have a look at Euro Yen. See again, Euro Yen's up, but you've seen huge weakness in the yen. So the dollar has been the predominant one. So yen has got weaker. It's not so much that the euro has got stronger. This is yen weakness. But, and it's a big but, I think we're coming to the end of that. You've got 130.59. We're at 130.11. So you've got an area that's going to provide good resistance, really good resistance, and your support will be, the first one will be 129.47. Okay, and then you've got all this little lot around here. So that's coming into play with the 21-day moving average at 128.78. That seems to me to be a good place to go for this market. You know where it is on the top side and where you want to be short. I've told you this, but I'll go back again and say it. You want to be short at 130.59. All right? I think that's about it, guys, for all the euro crosses and euro dollar and whatever else I've been looking at. It's going to be tricky. Markets are tricky at the moment, but if you play them right, then you can preempt and read the market, which is what we all want to do. Anyway, good luck. I will be with you a bit later.